Hi, this is Paul from globaltradingsoftware.com. Just jumped on before the oil pit open here. So there is the opening range, the range breakout strategy that we're going to be looking at as well. But right now, I've already had a trade on oil this morning using the slingshot. And this was the entry here. You can see on both charts, that was the buy at 68.31. And I got out at 68.55. So I was on a scalping time frame on the the slingshot, excuse me. So what I'm looking for, we've just had some major data out about half an hour ago, inflation data. Now I'm really just trading this on the Guardian zone. So this resistance here is the 30, the 5 and the 15 minutes. So there's a lot of resistance there, and it did fail there to begin with. So what I'm looking for is a catalyst of that oil pit open to push it up through that resistance and get a quick trade. So we'll see what happens. Oil pit opens in a minute, and if you can hear some squealing behind me, it's my puppy. I do apologise. She's wanting my attention. So there we got the oil pit open now, so let's see what happens. It could go down, but the thing for me is if it's got the momentum with the extra traders that are coming in and the more volume, usually we can see a spike, it'll push through. If this resistance is too much and it pushes down, that's fine. We've not lost anything, but we've got a buy order in there. And then the range breakout indicator will start to measure. It won't print just yet. This is on the left chart. What it will do is this first 10-minute range, this is the 5-minute chart on the right hand side, 10 on the left. It will define the range, and then we'll be looking for the long or the short or whatever it is outside of that range. So it could be that we still get a range form in here for that first 10 minutes, and we still look to look for that buy signal there. But the moment's coming down. The bias for the previous day's range is still green, so this is what we're still looking at now, a bullish bias. So I'm just going to pause it and wait to see what happens. Then I'll come back when we get anything moving. We are starting to push up a little bit now, some more volume coming in. I'll just pause it and then we'll see what happens. Okay, so we are pushing higher, trying to get through this resistance, so that momentum is starting to build. We're getting higher than average volume, which is normal anyway, because we have got the oil pit open. So more of the algos start trading, there's more volume, and at this moment in time there seems to be a lot more buyers in the market. We can see on the left hand side there that the candle's coloured green. The previous candle's grey, which is not candle, but it has less volume. So this candle already has more volume than the previous candle, so it's an accumulation. So the order's in. So what I'm going to do now is just put an ATM stop there, and I'm just going to go below the low of this current candle on the 5-minute, and I'm going to put the take profit just inside that 30-minute zone there. So really this strategy is just purely to do with the oil range, the oil pit open, and looking to break through that sort of resistance zone that's formed with the Guardian zones here on NinjaTrader. I'll put the links down below for this. So the Guardian zones is a multiple time frame strategy. It looks at, so if I just take the 30 off, you'll see those disappear. If I take the 15 off, you see that disappear, and that's just the 5. Add the 15. So what we've got is a big confluence of different time zone resistances there, and that's what we were trying to break out of with this oil pit open. So sensibly, I've just put the stop below the low of this current candle. It's quite tight. As far as the opening range is concerned, that's, it's reasonably tight. And what we're looking for is a push up here. And I'm basically just using these Guardian zones as my parameters for that entry, for the take profit here, and for here. So forget these buy signals on here. This is just the VWAP Predator. There's been some great signals earlier on in the day. It's just the chart I'm using. I've got the Guardian zones on there. So what we're looking for now is we usually look for the first 10 minutes to be the most active after that range breakout. So there's still that oil pit opening range. So we've still got about 6 minutes left on this. So might have been too early. We'll see. But you know, the good thing is we want to push. We didn't get a close outside of there, which little concerning, but it is pushing again now, so that's pretty good. I haven't got the manager on this one because we use part of the managers as the VWAP Predator. I would have dearly liked that candle to close up above the entry and more importantly up above this resistance zone. That's not happened. Just going to pause it and then we'll come back when something happens. So we've pushed back up again, which is pretty good. Just got to break that high there. There we go. I mean, the bias is pretty bullish as far as the bias depth heat map is concerned. So this was, you know, a sensible trade. Had a lot going for me at that time. There is a 10-minute short-term resistance it's got to push through, and I think it needs to get through 21 to actually break that. The opening range is now 72 to 17. So we are 30, 50 ticks this opening range. So it's quite a large opening range for oil. We've got some great volume, bullish volume coming in. It is pushing up. We're about $200 in profit right now. It's pretty good. And again, we on the 10-minute here, you see that zone 69.20 really needs to be broken through to give us some real good momentum there. Just going to go big on this chart again here. What we're not looking for is after that 10 minutes is a reversal, obviously, but it's done the hard work. If this candle can close up above here, the hard work is done and we can really rely on this previous resistance as support, and we'll just adjust the stop can be adjusted a little bit just below there. Not going to go risk free right now because we're only $240 in profit right now. We've had a good trade earlier on in the day with the slingshot, and again this strategy is purely to do with support and resistance, understanding when that oil pit's opening, understanding using the guardian zones where this multiple time frame sort of resistance zone is, and if it breaks we want to be in, and it's in. So you know, this is purely just guardian zones led, and what we're looking for now is a push up. It's going to be very difficult to manage this just yet. We need to get some more momentum pushing higher. I like to make things risk-free pretty quick, but we're only about 13 ticks in profit right here, 13, 14 ticks. We do need this candle to close. Closing there, the highs will be really good. With 15 ticks, that's $300 because I'm on 2 contracts. Profit right now, which is pretty good. We've got less than a minute left on this candle. Closing near the high would be beneficial for us here. Come back down a bit there. On my other chart, on my other screens, I'm just looking at a Unirenco on oil and seeing where it's finding support on these little pullbacks. So far, don't seem to be too worried about it actually. I do want to look left, what we've got here. Yeah, so again, you see the next 30-minute zone is really where that next bit of resistance is. We've gone through the 10-minute now because that was at 20. So you know, the next real resistance is at the zone that the guardian zones have given us. So that's got to be our target really. We've had the candle change, okay, then we've made new highs, so we're $360 profit right now. This momentum may run out, so what I'm going to do is just going to put the manager on here because I want to understand the volume on each candle. So let me just put the manager on here. Okay. $400 in profit right now. So this follow-up candle did have higher than average volume, but it has less volume than that one that took us into the trade. That one that was had that huge volume from that oil pit open. It's not unusual. What could happen right now is that this current candle is grey again. For example, at the moment, if that closes grey, what we could see is a pullback and test its previous resistance as support. So that means the trade is going to be on a little longer than we'd liked. But again, we can't look right. All we can do is understand the behaviour that's happening right now. So what I'm going to do is just pause the video again, because you don't want me waffling on for minutes and minutes and minutes. So I'm going to wait for something to happen, and then I'm going to restart the video. Okay, so we did come down to test that support. The candle was red, so that had higher volume than that previous candle, otherwise it would have been cyan. This rejection on high volume is a really good sign of what we use the manager for. So we're pushing up again. So sensibly, now we don't want to adjust the stop just yet. We want this price action to get above this 69.27 high here. This is a good sign. It's a rejection of the lows down here on higher volume than the previous candle. Fantastic. This next candle is important. I'll be back. Okay, so we've got a slightly higher high now. We're back at $400 profit. The candle following this high volume rejection was a higher high, higher low, and now this current candle is increasing in volume because it's green and not grey. So there's more buyers during this particular time frame, this 5-minute time frame, than there are now. So what we're seeing right now is actually a rejection of the highs. So far, the candle's not closed on this higher volume. It's a bit of a tug of war at the moment. I'm going to leave the stop where it is. It may be we've made this new high now from here, and we'll come back down and either test this support or form a higher support again. Some trades are over really quickly, and some trades take time and patience. So right now, all I've got to do is be patient. So I'm going to come back when something happens. Again, we're rejecting those highs now on higher volume. So this is a worrying sign. Right now we're $240 in profit. This candle's not closed. We've got less than 1 minute for this candle to close. It's closed now. So we've rejected those highs on higher volume. Little bit concerning. Let's see what happens on the next candle. I will pause the video for now and come back. Okay, so again, we had that rejection of the highs on high volume, and as thought, we came back down to test that support again. We've rejected that support at this moment in time. Candle's about to close. It's got less volume there, so it's a lower volume rejection, but it was a rejection, which is pretty good. So we're still in this trade. This is understanding this behavior pretty well, and this support zone really holding well from the Guardian zones, which was the resistance that we originally had in mind to break to get into this trade when the oil pit opened. I think the only issue is now is the US market is open. And now those correlations with ES and NQ and that sort of thing with oil are going to play into this. ES at the moment is pushing up. In theory, oil should push up as well. It's not pushing up with massive volume, but it's going. Because the entry is just above this support and resistance zone, it's very difficult to make this risk-free until we get some fresh air, until we get one or two candles closing and clearing that. At the moment, you see, it's just coming back to support. It needs to fly, really, before we make this risk-free, and most likely, if that happens fast, reasonably fast, it'll probably hit the target anyway. So we're back to $400 in profit again. So, there's decisions to make for traders sometimes. Okay, we're $480 in profit right now. See if we can break this high again and it doesn't get a nosebleed. Last time it broke the previous high pivot, it got a bit of a nosebleed and came back down to test that support again, and then more buyers came in and it pushed up again. So what we need is a good volume push through that high if we can. If not, we're going to be pretty range bound. And looks like ES is pushing back down again. We're in that first 15 minute of the US market open, so it's going to be quite volatile. It's going to be coming up and down. We just need to keep an eye on those correlations, really. Okay, we're through. This is really good. So we're over $400 in profit right now, around about $400 now. We did break that high again. Will it get a nosebleed again? We've got some good support down here, and I don't want to be adjusting the stop into that support zone right now. So I just got to keep that risk on right now until we push it. I mean, you can reduce that risk a little bit. We can push that up to just underneath that support zone. It's not going to make a massive difference, to be honest, right now. What we do need is for this candle to close in a couple of minutes strong and solid. We don't need it to reject those highs again. Otherwise, we could be in this trade for a long time. I mean, I've been pausing this video and we're currently at 18 minutes long. So, it's sometimes when we get instruments break through the support and resistance zones, they run hell for leather sometimes, and sometimes they take time, and traders have to be patient and understand that behavior, and the manager helps you do that. I'm going to put the link down below for the manager because I think that's really important. One of the things that all traders should have is the manager, because it helps you understand that behavior both in price action and volume. That candle's turned green now. That's a good sign. We've got more volume than that previous one. There's more buyers. We need to close near the high, and this should start to change that momentum now. And then I'm going to put the Guardian zones on there for NinjaTrader as well, because they are critical. They stop you from getting in trades, but also they give you some good entries as well, especially around catalysts like oil pit opens or data and things like that. So I'll put those links down below for the NinjaTrader platform, both the manager and the Guardian zones. And this bias depth heat map as well is one of those tools that every trader should have. We are looking really, really strong now. This nearly took the target there. We're $760 in profit right now. I think it's going to take this target, so this will be fantastic. Finally got that momentum. That candle closed. There we go. Target filled. That was an $800+ trade, but it's about being patient. So I won't apologize for the length of this video, and I did pause it, but hopefully you can understand everything that's going on there with those Guardian zones, and why I took that trade, why I was reasonably conservative with that stop, and allowed the manager to understand that behavior for me, not to panic, especially we moved up here it pulled back, a lot of retail traders would panic here. But if I've got the Guardian zones on, and I understand we rejected those lows in that support zone with higher volume, that gives me confidence to stay in this trade. So hopefully that helps. Check out the links below for the Guardian zones for NinjaTrader and the manager.